Hi everyone, this is Dr. Nitin Chhoda, and in this training video, I'm going to teach you how to avoid a huge tax bill, how to avoid interest, how to avoid penalties with your unemployment benefits. I'm going to cover three things in this training video. The first is that your unemployment benefits, including the $600 a week federal booster, which at the time I'm recording this video training is going to be available until the 31st of July. It's actually considered ordinary income. Number two, I'll talk about what is ordinary income. And number three, I'll give you three ways to offset a huge tax bill with penalties and interest associated with this unemployment income. Now, before I get started, let me say I understand the situation that all of my subscribers are going through out there. If you're receiving unemployment right now and if you don't have a job, whether you pay taxes or not next year, what is ordinary income, what is state tax income, what you need to pay, that may not be at the top of your priority list right now. In fact, you might just be saying, you know what, I don't really care about withholding and all of the other things, because right now my goal is to put food on the table, my goal is to pay rent, my goal is to make sure my lights don't go out. I get that, I recognize that, I empathize with that, but a lot of subscribers have asked for this training video, and also I'm trying to help all of us not only survive the present but also plan for the future. Now, for my subscribers who are unemployed or who lost their job and who are now waiting for unemployment, you need to be aware that your unemployment income, including the $600 federal booster, is considered ordinary income. Even if you see a significant drop in your total income because your wages, your salary is gone, you could see a tax bill next year because your unemployment benefits are considered ordinary income. Now, the fact is, a lot of individuals on unemployment don't even know, don't even realize that their income is considered as ordinary income, which is why I wanted to create this training video and give you some clarity about this situation. Now, what is ordinary income? Ordinary income refers to many different types of income that is taxed at the regular US tax brackets. This includes wages, salaries, tips and commissions. Now, this does include long-term capital gains and qualifying dividends, both of which have a more favorable tax treatment. Now, your unemployment benefits are taxed by the federal government as ordinary income. Now, as all of you probably know, when you get your paycheck, you're paying federal income tax, you're paying state income tax, you're paying Social Security and Medicare tax. When you get unemployment benefits, the federal government will get their taxes back when you file your taxes in the following year. So once again, your unemployment benefits, including the $600 federal booster, are subject to federal income tax. Now, the good news is they are not subject to Social Security and Medicare tax. And when it comes to state income tax, it really depends on your state. So again, your unemployment benefits are considered taxable income by the federal government, just like wages, and state taxes may or may not be applicable. I've done another video training where I talk about state income taxes, so definitely check that out on my channel, where I talk about the differences between different states as far as state income taxes are concerned. A lot of states have a shortfall in their own budget and they're charging state income taxes. For example, California and New York are charging state income taxes even for remote workers. In other words, workers who don't live there but who are passing through to work. Let's say they had to move to a different location or stay with a relative during the pandemic. On the other hand, states like Texas and Florida have no state income tax to begin with. So a portion of the unemployment benefits that you're getting now will essentially find its way back to the federal government when you file your taxes next year. That's just the way things are. So the way this works is, let me give you a scenario and highlight the differences between the two scenarios so it's a little bit easier to understand. Let's say you were living in a normal world, in a normal situation. You were working on site, you were working from your place of work, you were working from your office. And in that situation, let's say you made $30,000 a year. You would pay federal income tax, you would pay state income tax, you would pay Social Security, and you would pay Medicare taxes. But now, with the unemployment benefits situation, let's say you get the same $30,000 a year. Let's just assume that for the sake of argument so we can compare with the same numbers. In that case, you would pay federal income tax on the $30,000. You'd be required to pay that tax when you file your tax returns next year. You will not pay Social Security and Medicare taxes, but you may be required to pay state income taxes. It really depends on your state, because every state has different guidelines depending on whether you live in the state or whether you work in the state, depending on whether that state is your state of domicile, in other words, where you live, your primary residence, or if it's your state of work, in other words, you relocated for whatever reason to work in that state. Now, here's the problem with this situation that I want all my subscribers to understand. Let's say you're getting $30,000 in unemployment benefits this year, and there's no withholding. In other words, you get all the money and you don't pay any federal income tax. The problem is, if you don't pay a sufficient amount of federal income tax, then by the time you get to the next tax filing deadline, which is presumably April 15th, 2021, and now you owe back taxes for 2020, and remember, your unemployment benefits will be subject to federal income taxes. If you haven't paid enough taxes, you could not only have a huge tax bill come April 15, 2021, but you could also be subjected to penalties and interest on the unpaid amount. Now I'll give you 3 options to avoid a huge tax bill when it comes to your unemployment benefits. The first is to have taxes withheld. Now, when you're filing for unemployment benefits from your state agency, and again, every state has its own specific rules, ask to have 10% of your unemployment benefits withheld for federal income taxes. Now, this will cover federal income taxes, and if you have the ability to do so at the outset when you apply for state unemployment benefits, that's something you should consider doing. Now, if you're already receiving benefits and you want to make an adjustment, you'll fill out the IRS form W4V, which is a voluntary withholding request. And what this will do is this will adjust your withholding. You may also make changes to this every 2 weeks as and when you want to adjust your withholding. So let's say you're recertifying your unemployment claim every 2 weeks. Now remember, you have to follow the exact guidelines, the exact protocol from your state unemployment agency. So make sure you look to them for guidance. I'll include a link in the description below that allows you to get in touch with your state unemployment agency and ask them for specific advice. Reach out to the correct person so that you can adjust your withholding as needed, so that you don't have a huge backlog of federal income taxes and you don't have a huge tax bill when you file your income taxes next year. The best website for this is the Career One-Stop website from the US Department of Labor that can now link you to all of the individual state unemployment agencies, and I'm sure a lot of my subscribers know this already. The second option, if you want to avoid a huge tax bill at this time next year, is to file quarterly taxes. Now, this is more applicable to individuals who are self-employed. So if you're a wage earner, if you're on a salary, this may not be applicable to you. But if you are self-employed, you have the option to pay quarterly taxes now, and you should pay some amount of quarterly taxes so you avoid a huge tax bill, you avoid interest, you avoid penalties come tax time next year. Now, the third way to offset a huge tax bill, potentially penalties and interest next year when you're filing your 2020 tax returns on or before April 15, 2021, is to try and save 10% of your unemployment benefits towards federal taxes. Put that money in a savings account, hold on to that money, because cash is so important right now. We live in a climate where a lot of us are struggling, where a lot of us find it hard to pay rent, to pay for food, to pay our utilities. So cash is very important right now. This would be my preferred option. You save, you set aside money, because when the tax bill comes due next year, and it will come due next year, there's no way to avoid these taxes. You have to pay the taxes. So when the tax bill comes due next year, you should have some money set aside. Now, the reason I prefer this option is it gives you a little bit more flexibility. It gives you a bit more of a cushion, a buffer, if you will, because you'd rather have the money in a savings account and then use it for something that's necessary, as opposed to not have it when it comes time to pay taxes. Because then again, like I mentioned, you could be subjected to interest, you could be subjected to penalties, and you want to avoid that under any circumstances. I know this is a tough time for all of us, and I know that a lot of us really count on these unemployment benefits and need them to be able to pay our bills, and a lot of us are in a very dire situation. I'm trying to prepare you for what lies ahead, and even though, like I mentioned at the start of this training video, even though the withholding and even though the setting aside money for taxes may not be a high priority right now, even though the higher priority is to keep the lights on, the higher priority is to buy food, I completely understand that. I'm just trying to give you information so that you can be prepared for the future as well, because one day we will get through this, and one day all of this will be behind us. I'm with you, I support you all, and I appreciate you for watching this video. If you are an existing subscriber, thank you so much. If you're not a subscriber yet, please consider subscribing. I'll give you important updates that will help you get through this situation so that you know your options, you know what lies ahead, and you're financially prepared for a better future. Thank you so much for watching. Please click the like button because it really helps out the YouTube algorithm. I'm with you, and I'll see you in the next training video. Thank you.